And if I don't get assigned, then I get to keep the premium and I can sell another put sometime around Halloween. And I can continue to do this through the end of 2025 and just keep on collecting premiums through the end of the year. Hello, my name is Victor, and in today's video, I want to provide an update on the put that I sold on SOFI about 3 weeks ago or so. And just as a heads up, everything is going according to plan. And just want to provide a couple of reminders here before we get into the meat of the video. Again, selling a put is actually a bullish move on the stock. I figured that SOFI was not going to crash anytime soon. That is why I was so confident when I sold this put about 3 weeks ago. And because I sold that put, I gained a $29 premium for that contract. My strike price for the contract was $20, which means that if SOFI within the 31 days of the contract fell below $20, I would be assigned, meaning I would be obligated to buy 100 shares of SOFI. But the reason that you do this is for that premium, and based off of how much money I was willing to risk with the sold put, I am gaining a 1.5% projected return on investment. And as you can see by SOFI's stock price chart here, it has been a turbulent ride over this last month. I was actually going to make another video earlier in the week, but because I saw that SOFI was starting to run here towards the middle of the week or so, I figured, let me just hold off and let's see where SOFI ends at the end of the week. That way I can provide an update on my put sold. And again, the whole reason that you sell puts, besides the premium of course, is to sell high and then buy low. On September the 30th, when SOFI was crashing, this contract was worth $29 per contract. Now, here we are 25 days later, and this same contract is only worth $8. And that is exactly what I want. As the one who sold the put, I want to see this contract lose value over time. Because that means that when I want to close the contract or buy to close, I want to close it at a cheaper price. And to really explain myself here and give you an example, because I know that it's a lot of jargon, put options are far more complicated than my general topics here on my channel, but just know this. Time decay is on my side because I am the one who sold the put. When I had a look at the Greeks, I focused in on the theta. Theta is basically pay to play. It explains to you how much it's going to cost you per day if you're on the opposite side of that contract. You take the value under theta, in this case it's 0.0352, and you multiply it by 100 because there are 100 shares in the contract. When you multiply these numbers out, you get $3.52 per day. That is how much the contract is decaying over time. As the seller of the put, time is on my side because every single day that passes is better for me. Because so long as the stock price is above my strike price, I'm absolutely in the clear. I'm not worried about a thing. If anything, based off of that number, the $3.52, I might be able to just get out of this contract by Tuesday or Wednesday, assuming that the stock doesn't move from here. And right now it's at about $26 a share. So what would be my next move here? I sat down and had a good think about what I wanted to do here, and I basically have 3 options. Option number 1 is to just buy to close. Like I mentioned, if the stock price does not move by the time it's, let's say, Wednesday of this upcoming week, the value of the contract would have decayed because, again, remember, every single day the value of the contract is decaying. Buy to close, I might be able to buy at about maybe $2 to $3, and then I can just get out of the position. Option number 2 would be to roll the position or sell another put on SOFI. So I would basically be opening up a new position, collecting another premium, pushing out my expiration date for the contract, and probably setting a new strike price. Option number 3 would be to just hold the contract until the expiration date, which in this case would be October the 31st or Halloween. As for what option I'm probably not going to do, and that would be option number 3, if the value of the contract is low enough to where I can just buy to close or roll the position into something new, there's no reason for me to just hold that position. I would rather make another move instead of just keeping that money tied up. Because remember, I have $2,000 as collateral just in case the stock price were to go below my strike price. The next option would probably be just to buy to close. Again, it's a lot of ifs, but let's say hypothetically that SOFI shoots up again on Monday. Even like a 5% increase in the stock price on Monday would probably be enough to get the value of the contract below $5. In a situation like that, it could be tempting just to buy to close. But to be honest with you, I'm really leaning towards option number 2, and like I mentioned in my original video, selling the put on SOFI, I want to continue collecting premiums through the end of 2025. So if I had to give it a percentage of how likely I am to do it, I would say option number 2 would probably be a 90% chance. Option number 1 would probably be a 10% chance, only if SOFI were to shoot up so quickly over the course of Monday or Tuesday that it's just like, hey, you know what, let's just get out of this position. It was completely according to plan, bullish on SOFI as expected, but again, it's a big if. For all I know, SOFI could absolutely crater on Monday, and then I would probably have to wait until the contract loses value because of the time decay over the course of the week. But again, a lot of ifs. And option number 3, holding until the expiration date on Halloween, I'd probably give that a 0%. I am not doing that. But be sure to give me a like if you have enjoyed learning about my thought process, seeing how I go about selling puts. And if you have not subscribed, I invite you to do so. I make videos on my portfolio every single week. So if you would like to learn why I do things, how I do things, or if you are just entertained by seeing what kind of moves I make with my portfolio, well then there you go. Be sure to subscribe, and as always, I'll catch you in the next one. Peace.